The government is able to tax us at every single step, from when we use our money to pay a company to when they use it to pay us. Starting from us, the state government charges a 10% fee on any non-essential item or service that we purchase in the form of GST. This is usually already calculated as part of the price, and you can see a list here which will show all the items it doesn't apply to. Once this money reaches the company, the state government also charges a payroll tax, which is based on how much the company has to pay their employees, including superannuation. This gives the government an idea of where the most people are working and possibly living, so that they can try and build up that area. And once these areas are built up, it makes it more enticing for more people to go and live there and continue this cycle. The federal government then taxes these companies in the form of income tax, which is based on their gross income, which is the money that they're left with after paying their day-to-day running costs, paying any employees, as well as that payroll tax that they had to pay, and then also any purchasing stock and depreciating value on any machinery they may own. Banks receive this income a bit differently because they do make money on the fees that they may charge their customers, but they also make money based on the interest that they charge on their loans. Once this is all said and done, the actual amount that different companies have to pay is based on how much they actually make. So if you make under $50 million a year, then you only have to pay 25% in this income tax, but if you make over the threshold, then you have to pay a whole 30%. Once we receive the money that is paid to us by these companies, we then have to pay our own round of this income tax to the federal government. And this is based on your income from all of the different sources that you may have, such as your job and passive income. And then you have to take any necessary deductions off as well, such as donations, equipment that you have to buy for your job, and more, which is showing on screen now. You would then use a table like this to figure out how much you have to pay in income tax, and you can just use the formula that they give you to calculate it. For example, a yearly income of $82,000 after deductions would mean you fit into this middle bracket, which means that you have to pay $5,092 plus 32.5% of anything above $45,000, which means that you have to pay an extra $12,025. In Australia, we also have what's called a Medicare Levy, where you have to pay an extra 2% of your entire taxable income in the form of a tax. And this is used by the government to then give free essential healthcare to everyone in the country. This would mean that you'd have to pay an extra $1,640. That's all for me today. I've been Tom, and I'm signing off in yet another Tom Tony Magic video. See ya!